Okay, folks, today is Friday, August the 9th. You're looking at the U.S. bond market. U.S. 10-year yield is a 1.745. U.S. 2-year yield is a 1.649. So within 10 basis points. When the U.S. 2-year yield is higher than the U.S. 10-year yield, expect a lot of market volatility. So expect a nice little market correction when that occurs. Let's look to see how the stock market did today. So all the U.S. markets finished down for the day. The Dow finished down 1/3%. S&P 500 finished down 2/3%. NASDAQ down 1%, and small cap down 1.25%. So what we're still waiting to see if these markets are going to hit their 20-day moving average again. If they can't hit the 20-day moving average in the next few days, then we're just going to assume that they're probably not going to hit them, and we'll go back and probably retest the lows for the year. So that's one thing that we're waiting on. We're kind of cautious of going long in this market, especially with those U.S. 10-year yield and the U.S. 2-year yield being so close together. That would be a huge gamble to really go long this market unless it's obvious that it's going to keep going up. So that's not something we want to really take a risk on long term. We might do it for like a day or two here and there, but long term, that's nothing that we want to be a part of. Stay tuned for a sec. We're going to start looking at the individual markets. Look at the 1 hour time frame, 2 hour time frame, 4 hour time frame. Okay, so one thing we want to look at so we can try to determine what's going to happen in the next day or two in the markets. We want to start looking at semiconductors, the SMH. We also want to look at financials, which is XLF, and we want to pay attention to the small caps, which is the IWM. So let's take a quick look at those real quick. We're going to look at the 1 hour, 2 hour, and 4 hour time frames. I think that'll give us a big picture on about what we think it might do for the next day. That's just something we're going to try. So for SMH, which is the semiconductors, you look at the 1 hour chart, you see the PPO is turning negative. You see the MACD is negative. And you also see that the derivative oscillator is negative. 2 hour time frame. You see PPO is negative. You see the MACD is negative, but it's getting less negative. And the derivative oscillator is negative, but it also is becoming less negative. On a 4 hour chart, you see that the PPO, price percentage oscillator, is negative, as well as the MACD, and the derivative oscillator is about to turn negative. So with that being the case, we'll just assume that it's going to be negative for the next day. Let's take a quick look at the financials. XLF. On a 4 hour chart, you see it's becoming less positive, more negative on the price percentage oscillator, MACD, and the derivative oscillator. 2 hour chart. 2 hour chart. Price percentage oscillator, we'll call that negative. MACD, we'll call that negative. And the derivative oscillator is negative, but it's becoming less negative. 1 hour chart. PPO is about to turn negative, as well as the MACD, and the derivative derivative oscillators becoming less positive. Now let's look at IWM, which is the small caps. IWM small caps, 1 hour chart. You might as well call PPO negative. MACD is becoming negative, and the derivative oscillator is positive on the 1 hour chart. 2 hour chart, negative for all three. Price percentage oscillators negative. MACD is negative but becoming less negative. Derivative oscillators negative, becoming less negative. 4 hour time frame. PPO is negative, MACD is negative, and the derivative oscillator is about to turn negative. Okay, folks. So each week, I'm going to try to do at least one video like this where you can see where we're at year to date. So right now we're at 11.6 for the year. We are a little bit behind everybody else. That's normal because we take a very conservative approach. We would rather miss out on some gains than risk taking major losses. So right now we're at a 11.6% return for the year. But look at our 1 year return. It's a 16.23. 3-year average is a 14.12, and 5-year average is at like 11.37. Let's look at a 2060 target date. 2060 target date for right now is a 14.57. End of today, it'll probably be in the 13s. So it's just done a little bit better than us this year. But look at this 1 year return. It's a 3.43. Look at this 3-year average, 9.27. Let's look at Harbor Capital, which is the one that we always compete against, Harbor Capital. Well, let's look at S&P 500 first. All right, S&P 500 for the year, it says 18.59, but by the end of today, it'll be down about okay, looking at the S&P 500, right now it's at 18.59. When today updates, it'll probably be about 17.5, maybe even down to 17 because it had losses today. Harbor Capital right now is about a 20. A few weeks ago it was about 24, 25 range, but it'll probably be about 18.5 to 19 at the end of the day when it updates. We always compete against Harbor Capital. If you look at his 1 year return, it's a 7.6. 3-year average is a 18. 5-year average is a 14. So we're not too far off of it. Even though we don't beat it every year, we do all right. We keep up with it. If you look at the averages for Harbor Capital, those averages are higher than the S&P 500. Like longer term, like 3-year and 5-year. That's why we try to compete against Harbor Capital. So thank you for staying tuned. Thank you for staying tuned. We'll have more videos coming out. They'll talk about the mid caps. It'll also talk about the large caps. And we might even throw some international tutorial videos in there. Thanks. Like, comment, share, subscribe.